last couple of weeks in relation to the VIX and the indices. And what we're looking at here is we're looking at a monthly chart of the VIX. And I'm zoomed out to this longer term time frame to point out a couple things. See these downtrend lines that you see? This is '08. This is the '08 financial crisis. Here is another wedge that was forming, downward trend line that was forming before the coronavirus crisis. We broke out of those levels, ran up into and created a top of a channel up here. Very similar type of situation right now. We're squeezing up into resistance, and there's a counter trend long that has a target that takes us through that resistance level. This context is important when I show you the last 4 weeks. So as we've squeezed up into the top of this range, we have broken through the extensions to cause counter trend squeezes on the indices. Take a look here back at March 9th. So we had blown through profit targets of traditionals, and we had an extension up here, and the extension broke. And then that immediately gave us a new traditional short from highs. Now, what that looked like on the indices was when you go back here to March 8th, we had an extension failure. We had these little pullbacks on Monday morning, and it led us to, we rallied from the 66.40s all the way up into the 68.40s, almost 200 points. That's one of the moments that we're inside of, very similar to this moment. If you go back and you look at the next Monday that we were coming into, we had a long setup inside of these pullbacks that we actually double topped inside of on a Monday. We collapsed back down, and then we broke this little traditional support level, and then immediately had a new short from highs that we sold off from. And what was the ES doing at that moment? As we were coming into that Monday morning, we had our pullbacks from our Friday's lows to highs, and we had this rally coming out of our morning, which didn't actually complete its target, but that was part of the counter trend. You move forward another week, and we're going into another Monday morning, and we had a traditional that we had run into the previous week. That traditional long setup completed its target, and then what happened? We broke an extension. What happened after we broke the extension? Well, we had a brand new traditional short setup from highs to lows, and that gave us this massive VIX crush and indice rally coming out of the 23rd. What did it look like on the ES? You can look here as you're getting to the 23rd, and these are the pullbacks that we were in. There's this massive rally. Of course, that was a rally that was sold into last week, Monday. And what we're inside of right now is inside of a traditional to an extension. And this is the way that the extension was actually drawn up on Friday afternoon. We're not changing it to the new low here. And this is where it becomes important, because from the traditional long setups that we were inside of last week, we completed and then blew through targets. But those extensions, as they existed on Friday, haven't broken. They haven't broken yet. And why we're saying yet is because we don't know that they're going to break. If we defend above these 2665s, and we were looking at this as being the 2660, I think we'd be safe to round down to the 2655, that if we defend above those... This stream continues at emoneyaddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.